India has been making waves in the fintech industry, recently being recognized as one of the most vibrant hubs for fintech startups during the World Economic Forum at Davos, Switzerland. Invest India data predicts an impressive fintech market opportunity estimated to reach $1.3 trillion by 2025 and $2.1 trillion by 2030. With the highest fintech adoption rate of 87%, India is outpacing the global average of 64%. Investors from all over the world have been flocking to India in recent years, drawn by its prominence in the global fintech spotlight. However, in 2023, the Indian fintech industry faced a major setback with funding decreasing by 63% to $3 billion, a sharp drop from the record-breaking $8 billion in 2021 and $4.8 billion in 2022. Despite this, India remained one of the top-funded countries, and its position as a significant player on the global stage was solidified by ranking third globally in 2023 regarding fintech startup funding, according to the latest report by the Traction database. This decline in funding may be temporary, but it raises questions about what caused it and whether there will be any long-term effects. The market sentiment in the fintech industry has taken a nosedive, echoing the global trends. The year 2023 has seen a significant drop in the global investment in fintech, with funding reaching a five-year low of $113.7 billion, marking a 42% decline from $196.3 billion reported in 2022. This plunge can be attributed to various factors, including high interest rates, persistent inflation in various regions, and conflicts in Ukraine and the Middle East. The declining valuations of fintech companies have also contributed to a growing sense of caution among fintech investors. Despite this decline, some interesting trends have emerged recently that could shape the future of the fintech industry. In Q4 2023, late-stage rounds secured $76 million in funding, which is a significant YoY decrease of 66% compared to early-stage and seed-stage rounds that witnessed a 20% and 36% increase respectively. This indicates a shift towards sustainability and efficiency, and investors are looking for startups that have strong business models, solid teams, and a clear vision of growth and profitability. The focus is now on quality over quantity, and investors are more cautious about investing in companies that prioritize growth at all costs. The vast untapped market in smaller towns and rural areas has tremendous potential given the favorable socio-economic indicators. India's banking system has struggled to achieve a high level of formal credit penetration, which means that many individuals and businesses have difficulty accessing affordable credit. Consequently, online money lending platforms have emerged to fill this gap. These platforms offer easy and hassle-free credit services, making it easier for people to borrow money and access financial services. Recently, there has been a drop in funding for fintech companies in India, which has raised concerns about the future of the industry. However, some analysts believe that this slowdown may be a temporary pause, rather than a complete stop. Despite the challenges, there is enormous potential for growth in rural India, where many people still lack access to formal financial services. To succeed in this space, fintech firms must improve their business models and bring innovation and convenience to meet the unique and ever-changing demands of rural communities. This may include developing new products and services that are tailored to the needs of rural customers, as well as leveraging new technologies to improve the efficiency and accessibility of financial services. By doing so, fintech firms can help to unlock the economic potential of rural India and improve financial inclusion for millions of people.